What's up everybody? Welcome to the Stocks channel. My name is Corey and today in the stock market we see a continuation of the bounce across the board, but so far we don't see extremely strong follow through and we still see somewhat of doji looking candles. So first up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were up 0.46% and we did get a slight close above resistance at 416. But we're still getting rejected at a negatively sloping 5 EMA and we still have a very strong bear trend. So right now there is the possibility above 416 if we can break out above this 5 EMA that we could run up to test resistance at 428, and we do have FOMC tomorrow, so that is going to be a major catalyst on where we go from here. Nobody knows how the price action is going to move during FOMC, but I can tell you it is going to be a big move in either direction. So going into tomorrow you need to be very careful of whipsaws. So you need to understand your price action follow throughs. If we start breaking down below new lows and we start breaking below 411, you immediately need to get more cautious that we could be heading down there to close the gap at 400 and on our way to hit the price target at 393. Remember, as long as we have this bear trend and we have price action below all the moving averages, we have valid price targets that take us all the way down into the 390s. I always tell you to respect the trend, and there is no difference in this scenario because we do have such a strong downtrend. You need to constantly be reminding yourself that there is more downside price targets that we haven't yet met. So right now the expectation is that SPY is still trying to put in a lower high before going down there to hit our price target unless we start getting a bullish breakout in the price action. The first bullish breakout will be the breakout above 428. And then getting back over the next breakout at 438. Above SPY, 438 will be looking a lot more bullish and we will lose the bear trend, but not any sooner than that. So FOMC tomorrow is going to be a huge catalyst for a monster move. Don't forget we still have the bear trend and the bulls are going against a very strong trend. So the bulls have the hardest job in the world until they can start getting a bullish breakout. So don't expect this to be a smooth ride higher unless we get a decisive breakout above about 418, which is going to be that level right around the 5 EMA. Above that level, the bears might retreat back to the next resistance around 428, but not any sooner than that because they still have the upper hand and they still have the advantage of the trend. So be very nimble tomorrow because it will be very volatile and we could still go higher and still form a lower high as long as we stay below 428. As soon as we start breaking above 428, we need to start getting a lot more bullish with the next bullish confirmation above the 20 simple moving average and the 50 EMA. On the Nasdaq 100 triple Qs, we were very flat on the day, only going up 0.11% and printing a very nice looking indecision candle, which is a doji. So from here, you can see we are still closing above 318, but we still have a very strong bear trend and we're still struggling to break back over the 5 EMA. So this is still a strong downtrend with a valid price target down here at 303.5. You should see the selling picking up momentum as we break down below 318 and start breaking below the previous low at 313, which means we should be well on our way to hitting that price target to the downside. However, above 318, there's still the possibility we're trying to go up to hit resistance or make a lower high somewhere around 328 to 334. So if we start breaking out above about 320 to 321, it's possible we're going up to resistance at 328 and 334. Above 334, that will look like a bullish breakout and we'll still have strong resistance around the 50 EMA and this level at 347. And we still do have a gap to fill right around 349. So just like on SPY, the bulls have a lot of work to do because they are going against the trend. So if they do get a bullish breakout above 334, you will see the bears starting to retreat to the previous resistance up here at 347. But there's no telling when the bears want to show up, and remember FOMC is going to be a major catalyst, so you're only staying bullish in the short term above 318, and you still need to be looking out for the possibility of a lower high before another lower low to get down to our price target. We can't get bullish until we either lose the bear trend or get some bullish price action confirmation, and right now we don't have either of those, so still remain cautious because there's more than likely more downside coming until we see one of those scenarios playing out. In the Dow Jones, we were up 0.15% today, also printing an indecision doji and still rejecting that resistance level around 333. Remember, in the Dow Jones, we hit our double top price target at 326 and we were just getting way too oversold. So there's still the possibility this is just a dead cat bounce, get rejected at resistance and still go make that next leg lower or at least retest the lows at 326. So if we break below 326, you're looking for the price target at 322.6 or a bullish breakout above 333 to test resistance at 340. Above 340, we'll be getting more bullish for a retest of resistance around 347. And if we can break above 347, that will be a bullish breakout. We still have the downtrend and we still have bearish price action, so still remain cautious because it's more than likely we are still trending lower. On the Russell 2000 IWM ETF, we were up 0.86% today, and the small caps closed right on top of the 5 EMA after getting that bounce off support right around 183. This is still a strong downtrend and we still haven't broken above resistance at 191.6. So watch that resistance level for a possible rejection, and remember we still do have a valid price target that could take us all the way down to about 170. We still have support at 183 and 177.6, so watch those levels as well. If we start breaking above the 190s, you're looking for a retest of around 199, and if we could break above this resistance trend line, that will be a bullish breakout, but we're not getting bullish until we can start closing above 205 and above 212. This is a very strong bear market and a very strong downtrend, so we cannot get bullish until we see some type of bullish breakout. On the ARKK ETF, we were down 0.52%, and ARKK got very close to testing that resistance around 52, but got rejected before reaching that level, and as you can tell, this bear market is still very strong. Getting rejected around the 5 EMA means we could come back down to retest support at 47, and below 47 we still have a valid price target at that $40 support below. If we can get above 52, you're looking for a retest of either the 20 simple moving average or the resistance trend line, which is going to be right around 56 to 59 to 60, and if we can get a bullish breakout above 60, you're looking for the gap close at 66. This is a very strong bear market and it could still go much lower, so do not get bullish on this ETF until it can start closing above 70. On the VIX, we were down 9.56% today, and the VIX did crush back down below 30, but the VIX still has a bull trend and the VIX is still very elevated above 24. So even though the VIX is crushing in the short term and this is a bullish development, we still have to remember the VIX is elevated in a bull trend and it could spike yet again as soon as tomorrow after FOMC, so you still need to be very cautious. In order to get bullish in the longer term, I would like to see the VIX closing down below 24, losing the bull trend, and eventually getting down below 20. As long as the VIX is above 20 and especially above 24, you need to remain very cautious because it's still possible the VIX is trying to trend up towards 38 to put in a bottom. On Bitcoin, we're currently down about 2% and Bitcoin is getting down into that support zone at 37,000, and you can see that we are wedging down into that support. So we are about to see a very large move in Bitcoin, which is to be expected because we expect to see the same thing in the stock market. So what you want to watch on Bitcoin is a bearish breakdown below 37,000 or a bullish bounce off 37,000 and getting a breakout back over the 50 EMA at 41,000. If we can get back over the 50 EMA, we'll lose the bear trend, and the next bullish breakout will be a close above 42 to 43,000, and then we should be starting to develop a bull trend. So if Bitcoin can bounce off 37,000, you could start to get bullish in the short term. But if we lose support at 37,000, that will be extremely bearish, which means Bitcoin is more than likely trending down to 30,000. So in the short term, I do think the Bitcoin bulls are going to try to make a stand around this support zone. So watch for a very strong bounce that could possibly take us to a bullish breakout or at least to a lower high before we eventually come back down and retest support and possibly break down through it at a later date. So in the short term, I do think you can start getting bullish around this support zone, but you need to be ready to take a loss as soon as we start breaking down below that level. And remember that Bitcoin does love to fake you out, so it could still break down through support, take out some stop losses, and then get the bullish breakout at a later date. So you need to watch this zone very closely and understand things are going to get very volatile tomorrow. On NVDA stock, we were up 0.35% today, with NVIDIA retesting that resistance zone right around 199, and so far it looks like we are trying to get back above the resistance trend line. If NVIDIA can close above 200, we're looking for a retest of the breakdown below 210, and a rejection from that resistance will be extremely bearish. If NVIDIA retests 210 and gets rejected, we're looking for it to start trending down towards our price target at 150. But if we can get above 210, we're looking for a retest of resistance at 223 and then closing the gap at 230 above that level. That should be enough for a bullish breakout to retest strong resistance at 244. And I do think we need to get above 244 to start developing a bull trend. So that will be the most critical resistance if we get a breakout above 230. So watch NVIDIA because it's very close to retesting the breakdown as resistance. And that's going to tell us if this bear market is continuing or if we've seen a local bottom and we're due for a relief rally from here. On Tesla stock, we were up 0.7% today, and Tesla did close back over $900 today. So we are still seeing Tesla bulls holding in there and still hanging around this zone. Remember, there is the possibility that Tesla is bullish above $900, but below $900, you need to be extremely risk off for much lower prices. So the bulls are hanging in there, and the next test for the bulls will be breaking back above resistance at 937 and then getting back over the 50 EMA, which is at 957. Above that, we need the bullish breakout above 975, and then we should start developing a bull trend. The sooner the Tesla bulls can get back over 975, the better, because our 20 simple moving average is still above the 50 EMA, which means there is still the possibility of developing a bull trend in the short term if the bulls can start blasting through resistance over the next few days. So watch that critical breakout above 937 and 975, or the bearish breakdown below 900 to retest the lows at 856 and 828. On Apple stock, we were up 0.96% today, and Apple is continuing that bounce off of that double top price target at 156. And so far, it is looking like that support level is holding up because we did test it again today, and we did bounce and close near the 5 EMA. However, we're still in a bear trend, and we're still closing at resistance at the 5 EMA. So from here, we're looking for a breakdown below 156 to start testing the next support zone lower at 150, or a bullish breakout above 162, and then eventually trying to break out above 166 for a retest of resistance at 168. Above 168, we'll be looking a lot more bullish for that gap close at 174, but we still have very strong resistance at 166 that we need to break out above before we can start getting bullish. On the financial sector, we were up 1.3% today, and so far this is still looking extremely bearish because all we saw today was a rejection at the breakdown of support. So we're now seeing the old support zone working as resistance, and they still have a very strong bear trend. We cannot get bullish on the financials until they can get back over this 50 EMA. The industrial sector was up 0.66% today, still with bearish price action and still with a bear trend. So don't get bullish until we can start breaking through some of this upside resistance. The healthcare sector was up 0.32% today, but still with bearish price action and still with a developing bear trend. So just like the other sectors, this is still looking weak at this time. The energy sector was up 2.8% today, and we did get that bullish breakout back above 77.5, and we did close back over the 20 simple moving average. If we can get a second day of follow through, it's possible the energy sector is done with this pullback and trying to go retest new 52-week highs. So jumping back over to the S&P 500, tomorrow is going to be a very volatile day that could swing the market at least 3 to 4% in either direction. So know the breakdown below 411 on SPY or the bullish breakout above about 419 to retest that resistance zone right around 428. If we break down to new lows and we start closing below 411, you're looking for a quick trip to fill the gap at $400 and possibly even hit our price target at 393. So be very cautious of elevated volatility going into tomorrow and know these critical support and resistance zones very well and follow the price action accordingly. If you don't want to trade volatility, just sit on the sidelines and wait for this to blow over and then come back into the market when there's a more clear picture on direction. But right now, this is a very strong bear trend, so you should be expecting more downside until we get a bullish breakout and a reversal of the bear trend. Also, don't forget that I do have Bank Trade Alerts, which is an algorithm-driven trade alert service that only trades the ETF TQQQ and sends you all of your buy and sell alerts directly via email and text message. Even in the bear market of 2008, Bank Trade Alerts beat the market and had a very positive return. If you're looking for more information or want to subscribe, you can click on the link in the description of this video. I also have the Stocks Channel Discord where I do intraday updates and analysis and bring new trade ideas to you weekly. If you're interested in joining the Stocks Channel Discord community, you can find out how to join the Discord server by clicking on the link below. So thanks for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.